The prices have to go much, much higher in order to accommodate very little market cap to go around, because it's an asymmetrical bet to the upside. The upside potential in gold stocks so dwarfs the downside risk that it's a bet that you have to make, and it's a smart bet. And then Wall Street's going to say, you know what, maybe we should actually put a buy rating on one of these gold stocks. Maybe we should, recommend that somebody buy it. I mean, right now, nobody's talking about it, but they're just going to be so cheap. And these companies are going to be minting money, right? They're literally gold mines, and they are going to be buying back their own stock hand over fist. And you know what they're going to be doing? They're going to be buying back their own stock instead of looking for new gold mines. So we're not going to get a big increase in supply. And when they're finished buying up their own stock, they're going to be using their stock as currency to buy up other stocks. It's going to be a huge consolidation in the industry. And then eventually the public's going to wake up. Investors are going to want in on this.
Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. Join our WhatsApp channel for real-time updates, breaking news, and expert predictions on gold, silver, and financial markets. Link in the description or pinned comment. Stay ahead of the curve. Don't miss out.
God, we totally got inflation wrong. We really screwed up with these rate cuts. We need to take all 100 basis points back. In fact, we need to go up 100. We need 200 basis point right now, right? We need to quickly go to where we should be before this really gets out of hand, right? But of course, they're not going to do that. But the fact that they're not hiking rates, that is the problem. Because with inflation rising every month, that means real rates are falling. And that is bearish for the dollar, but it's ultra bearish for gold. And gold had the best reversal. So when the news came out, gold was already down about 15 or 20 bucks coming into the numbers, because I think maybe there was some fear already in the gold market that we would have worse than expected inflation. So people were kind of getting ready for it. And then when the number came out confirming that fear, gold went down immediately about like 40 bucks. Right? Silver also went down. It wasn't as weak as you might have thought, but it was down, 20 something cents, something like that. And then gold started to rally back, and it actually closed positive $5 or $6 on the day. It closed about around 2,905-ish, around there. Now, by the way, on Monday night, and I didn't do a podcast Monday, but I did an X Spaces on Monday, and I talked about this. 940, and we reversed, and I think today's low was around 2,865, just above there. We may never see that number again. That may be the low. I think gold's going up from here. This was a nice day technically. We took out yesterday's low and closed positive. We didn't take out yesterday's high in gold, but the fact that gold shrugged off this hotter than expected inflation news, because months and months ago, a CPI report like this would have sent gold down for the count that day. It would have gone down 40 or 50 bucks or 60 bucks, and it wouldn't have recovered, would have closed near the lows. The markets are waking up to this reality that bad news on inflation is actually good news for gold. Right? And eventually we're going to have huge rallies. Gold's going to be up $50, $100 when we get bad inflation news, because it just confirms why you need to own gold, because inflation is running out of control and the Fed's not doing anything about it.
In today's news recap, China to start trial for insurers to invest in gold. China's National Financial Regulatory Administration revealed on Friday the initiation of a trial program aimed at integrating insurance funds into gold investments. As per the organization, this initiative, named the Pilot Program of Insurance Funds Investing in Gold, is designed to broaden the channels for the use of insurance funds, optimize the insurance asset allocation structure, and promote insurance companies to improve their asset liability management level. Additionally, the agency stated that it will diligently monitor the advancement of this pilot, reinforce regulatory oversight, and foster the growth of insurance funds investing in the yellow metal. What do you think of this? Is the master plan being revealed in front of us and no one is paying attention?
But more than gold, is the gold mining stocks. Now, gold mining stocks had a great day today because they took out yesterday's low and then not only took out yesterday's high, but they closed above yesterday's high. The GDX was up 1.7%, GDXJ up 1.72 as well. But both of them closed above yesterday's high. But the star of the day was Barrick Gold, which I happen to talk about as an example of how badly the analysts have got this stock wrong. And I was saying that we were going to start to get the earnings coming out, and I expected a lot of gold companies to come out with better than expected earnings. And that is exactly what happened with Barrick. Barrick beat on earnings considerably, and they canceled their old stock buyback and announced a new $1 billion stock buyback. And I think what's also very significant about the Barrick earnings is the realized gold price. So they ended up getting a realized gold price of about $2,650 last quarter. And that was well above the 1,986 that they realized in the same quarter a year ago. So a huge increase in the gold price year over year. And that's why they had a big earnings beat. But look at where gold is now. It's already at 2,900. It's already, almost $300 higher than the price they got for the gold they sold last quarter. So the earnings are going to be even better this quarter. And so this could be a wake-up call to Wall Street, a few more of these numbers. Now, we got Kinross that came out after the close, and somehow they managed to miss their earnings. They were supposed to earn 25 cents on the quarter, and they only earned 20 cents. Now, the same quarter last year, they earned 11 cents. So they still almost doubled their earnings in a year, which is a fantastic earnings growth. But for some reason, and I'm not sure all the details, I haven't looked through it all, they missed. And so that stock was down after hours, maybe 5 or 6%. So that may delay the stampede into gold stocks, although Royal Gold came out with a really strong beat after the close. Those are the only three gold stocks that reported today. Barrick in the morning, and then Royal Gold and Kinross after the close. I own all three of those stocks personally. We own them in our funds, the gold fund, even our value and dividend payers fund own Barrick and Kinross. By the way, I looked at the dividend payers fund. It's up about 11.5% year to date. But more importantly, it's blowing its category behind. It's almost double the category average. It's the number one fund in its class of 350 funds so far in 2025. And all my funds, my value fund is doing also way near the top, maybe in the top 2%, not the top 1% like the dividend payer fund. But I think this trend is going to continue in my funds. I talk about all the redemptions that we've been having from gold stocks, GDX, GDXJ, and gold ETFs. Well, all last year we had net redemptions out of all my mutual funds. All of my funds last year, people were selling. And the same thing this year. Even though they're top performing funds, people continue to liquidate these funds. My gold fund, again, has seen net